So welcome again. Let's go through I'll take you through a practical session of how a short-term strategy comes into play with whatever learnings that we've done just now. And post that, you'll have to go through and do your own challenge. Okay, what do you need to do? Number one, open your trading account if not open. Now, suppose some of you all are trading already. Okay, I don't know. But if you don't, then you should open an account, right? And the platforms are going to be mentioned through that you can keep it open now, and ideally you should do your research to find out. But then if not, you can bring it up to me and I'll let you know which ones are the typical ones. But ideally, if there's a bank account that you have with a particular bank, they have their own platform, right? And I'm assuming you have the right bank in place. From a perspective of they should be having their own platform, or they would recommend. For short-term trading, depending on the country you are in, each of them would work accordingly. Okay, but if this is something that you need to know more, then you please bring out of my notice, because I want to be neutral on this and suggest which one that best works for you. What worked for me in the US scenario is E-Trade. I use that I use everywhere for all my activities for commodities or even for stock trading. What worked for me in the Indian scenario is my bank, my two banks, HDFC, ICICI. I also use Kotak. I use some of them. I use some other account for my kind of active trading, if you will. That is called Zerodha and Sharekhan to some extent. And then I use Upstocks, all right, for my derivative. That means specifically for options and future trading of sorts, right? These are various platforms I use. Okay, but if you're starting off new, here's my input to you. Take a bank-related kind of platform, which is the right one. Okay, and create your long-term portfolio there. So segregate the two, right? So long-term portfolio comes there. For a short-term portfolio, use your one of these that I explained to you, one of these platforms, right? Zerodhas and the Sharekhans if you're in India, or Upstocks or one of those. So these are like almost 0% they charge you per trade and so on and so forth. The banks one could be a little more expensive, right? For my US ones, I typically use E-Trade for both, right? Because I have a limited portfolio and so on and so forth. But that is what I use it for. Okay. Of course, for other commodities, I have different ones. For example, for Forex, I use something called Ovanda. All right. And for Indian ones, I use a different one. Right. So with that said, let's jump into the practical view. So you'll get a little inkling of what I was talking about in a more kind of practical fashion. Right. And we'll come back to complete the fact that, okay, let me finish the training, the challenge that you should be accomplished, so that once you are going through the actual practical view of how things are done, you can then relate the two, so that then once you go back and you will be able to do this in a more practical fashion, right? So after you open an account, create your templates in tradingview.com. That's the platform I use for my analysis, and I'll take you there right now. Then use the learn principle for 5 dummy trades. So you should do at least 5 trades before you come to Rise Circle to even point out a question. You might not be able to otherwise, because if you just observe a few things and come back, that the outcome that you are looking for won't be practical enough for you. So do it yourself and observe your trade. Even if you don't put capital, right? Run a dummy trade, right? Suppose you do as they call a paper trade. Excuse me. A paper trade would mean that you will anticipate taking a trade, and you put the value and you put the risk and the other four-step criteria, and see what the outcome is. And then you do multiple times until you're very sure. So you'll and in the process you realize what is going wrong or what is not right, or whether you're getting right the first time or you're not getting right at all, and those factors, right? Then you try a small sum, and then instead of paper trading, you do small sum, maybe 1 stock, maybe 2 stocks of a particular kind of company, and then start to trade there with the principles and the steps shown, and see the outcome. Now that will give you the right kind of practical outcome for a question to be asked during the discussion that we have. Okay. Now with that said, the next level, that is the next step, would be to bring your the practicals carried out on Rise Circle, because periodically I'll go into details of each of the elements, right? So if you miss out on the previous one, on a cyclic front, once we are in a kind of rice circle discussion, there might not be repetition. Okay, there might be some recording sometimes you might put, but that but if you're not, if you're not on the bus, you would have kind of missed the bus by then. All right, so I'll try to make it as simple as possible and try to put all the recordings in place as much as possible, but I think unless you ask the right kind of questions, you might not be able to come to the point where it's supposed to, because this is what happened to me. Right. So once the some of my other mentors and respective areas, they kept on asking, giving me some inputs, it helped my purpose much better. Okay, so let's jump into it. I'll take you to trading view. All right, what we see on the screen, so it's a Google, so we have a Google chart in front of us. Right now, if you remember, the first step is to position size, right, of things. Or rather, if okay, let me start from SAPR. The SAPR in the first step is talking about screening. Okay, how is screening done? Now, screening, before I start there, I'm sorry, let me take you through trading view. Right? Trading view is a platform which allows you to do some analysis. Now, what happens in trading view is you have various tools which you can acclimatize yourself with. There is a watch list that you have created on the right hand side, and then you on the top you see various time frames. If you remember, I was talking about short-term time frame and the long-term time frame, right? These, and then there are various candlestick patterns. So these are the main things that you should be looking at. One of the most active usage will be for these lines, right? These are trend lines, as they call it. Okay, for price action activities. So, and the second one would be some of these graphic elements we'll use for marking certain zones, right? So these two would be the main criteria. Time frame, the second one. Third is watch list, and then we'll see the screener, right? We'll choose something to show you what is happening in the marketplace and which stock can be run with. All right. So, for example, TradingView allows you to do a screener, which is inbuilt screener, right? So suppose you click on it. Here you can put your filter. So once, if you remember, I told you about practicalities of things, right? And you start learning more, you'll start putting your own criteria. Now some of them I will share with you already, which are templates, and then you can put that criteria in and you'll get some outcome. Okay. So for example, let's see in front of for in the US, right? Suppose we have we do a criteria for one of a technical cross, right? If you remember, and if you can refer to your notes, there is we talked about the whole MARBS process, right? ADX was one of them I mentioned during, besides MACD. A is the ADX, right? So once there's a cross, and I'll show you what a cross means, but just understand it for a moment that there is a cross happening between two lines, and that is resulting into some trade that can happen. Now you see these are strong sells, all right, all of them are, right? Now because I've chosen a down, now if I choose an up, right? Now for example, I choose something like probable swings. Okay, so let's take that. You might not, because currently the markets are in a bad state, you might not find very many of those. Having said that, there should be something that might come up our way, and say let's take out this. Okay, or there is. Okay, so we have a strong buy. Okay, say Unum Group, there is a strong breakout, appears to be. Breakout means it's going up at a rapid pace. So let's see Unum, what it does. Okay, Unum or an Unum, I don't know this company, by the way, guys. So Unum, right? And I click. So this is US markets. You see this? Now what you see, there's a complex set of graphs happening in front of you, right? And people are starting on new. The below ones are called indicators, and this green is called an indicator. What you see in green and these red lines are nothing but a graph showing the movement of the stock, and this is called a candlestick pattern. The green means it's going up and the red candle means going down. If you see, each of these candles have a wick. That means they have not closed in their position, but they went up till there and went down. For example, in this case, right? So you have to expand it. If you see, there is a wick here in the red one. That means the uppermost limit was here, right, on the top of the wick, and then it came down again until the point it's ended here. So the red has ended here. For a green, it started from here, went up, and if there's a small wick on the top, that means it went even higher but came down lower to that extent, right? So these are simple, very simple understanding of candlestick, but it's a detailed phenomenon, right? Because each candlestick means something and candle pattern. But for our current discussion, might not be as important, right? Though in price action perspective it does, and we'll go into details of those things as continuous learning in rice circles, okay? So now just live with it. Now what I'm going to do is I'm going to remove all these indicators, okay? Because if you remember, first we do price action. A price action is best done without these indicators, and based on our findings, then we use indicators to re-verify those, and then use the tenfold principle and position sizing and all that. So up till now we screened one, that is we screened Unum as one of our possible candidate because they are breaking out, okay? So I'll start with removing all the indicators, right? Now what you see is a plain graph, okay? And graphs appear in various formats, right? And just for the people who are a little more curious, see these are various graph formats, okay? Even if a line format I put here, right? This is simply that's moving in this direction, okay? Doesn't really mean too much, but once you become an expert, you will start using this more, okay? But assuming that you understand greens and reds a little better because it goes ups and down, there are ups and downs rather, and we were talking and showing you that ever since. So let's go back to candles, okay? Now, how I do my price action is as follows, right? I go at the higher time frame, which is a monthly. Now each candle is representing a month, okay? What you see, it has come down up till here, and the graph is showing now it's going up, okay? So at a most simplistic level, I will make there's a trend which is happening. That means I take the lowest part of that graph, and I take the next lowest part and put a line like this. This is showing that it's going upwards. That's a trend line which is going upwards, right? Now again, for somebody who's more curious, and this is a quick tip, right? There is a pattern here. This is called a reverse head and shoulder, as you will know, or some of you might know, right? This pattern is a positive pattern. That means from here the breakout starts, okay? That's the reason we got a strong buy. So if you put a line like this, right, it's a pattern of 3 triangles, one small here, one big one here, and a smaller one here. So it's called a reverse head and shoulder, where these are 2 shoulders and this is the head, okay? And once it breaks out that space like it did here, right, it starts going up. So hence the strong buy. So now leaving that aside, it's part of price action, and it's a detailed one once people mature into that level, and we'll do that in the rice circle with the lot which is filtered and now into next level of maturity. Or maybe we'll create more horizontals here, right, depending on the kind of queries we get. So from a basic, let's stick to the basic still. So we join this line, it's called a trend line. It's showing that it's going up, right? Now what I'm going to do is I am going to show that up till here, right, you've seen these candles here in monthly time frame. I'm going to join these candles here because this was the topmost level, as we see here up till now, that this guy has gone, right? And then we're going to put one more line saying that this was the next one where it went up to, right? And I'll tell you why. After we create this means there is that this could be a resistance. That means this is where the previous month, this month got resistive to the point, right? And now if you see, this guy has come right at the neck to neck with the previous multiple times that it tried to break out of this line, right, until it went down. There's a chance, even if there's a shape which is formed, it can go down further, right? And that looking at the candle looks like it will go down. But having said that, from a time frame analysis, right, I told you, make those 2 lines, make these 3 lines. This line, as I told you, is a line which is showing that the trend is up. This is showing where the first resistance happened. This is showing where the second resistance happened, right? So this is the number 1 criteria. Then I go to a smaller time frame, right? If you see, it is all gone. I make this seeable in one shot. The larger candles which are monthly now have become weekly, right? So we see that criteria still remains, that still at that same point wherever we constructed these things, the layers, right? However, now what we see, one more formation for which we will now use a smaller kind of triangle, which is rather a trend line, showing that in a weekly time frame also this guy is going up. Okay, because this was lowest point, so that has to get joined now, and we made it join up here. So we joined these two from monthly, these two from a weekly basis, and our top ones remain the same because resistance is the same. So now I go on a daily basis, right? Now see, the scenario changes. Okay, don't get confused because I'm trying to make it as simple as possible, and it is as simple as what you can see. So what you see, there was a breakout here, right? There's a gap because it's the previous day, the next day when it started from here, it just jumped here. Okay, so here. Now what we can do is we can still make one more line like this from here. Okay, now what do these lines indicate? These lines indicate if below this, if this guy starts coming below this, that means it's going to go down, right? And if it continues up from here, that means this first resistance, if it encompasses, then goes up here until here. That is what it simply means. This is the purpose of doing trend line kind of analysis and putting price action into play. Okay. For now, this is good enough for you to understand that you made these trend lines. Okay. Now let's blow it up. Okay. You saw it weekly, you saw it monthly, and when you see these time frames, the larger purpose is when you make a long-term portfolio, you have to go on monthly and weekly ones. When you make a short-term portfolio, you have to focus on a daily one. Okay, this is daily. So each candle is now a day candle. In one day, what happened? Clear? So with that said, now I'm going to do is I'm going to reset this chart to the point where it is. Okay, and what we have found out is still going up and might still go up from here until this point. Okay, though we see there are two of these here, which we might try to now join and put here. So this could be the first level of resistance if it goes up. But if it goes down, it can go right up till here, or it can go to its previous low here. Okay, it can go right up till here. So you got 2 pointers now. If it goes up, it can go here. If it goes down, it can go up till here. Right? If it goes further, it can go right up till down, or right up to this point. As simple as that. Once you've done this, right, now we will reconfirm it by looking at the indicators. Okay, so now let me bring up the indicator, the MARBs, if you remember. So up till now, price action has happened to see where it can go, and we are seeing, since it's a green candle and things are looking good and so on and so forth, we will keep it and stick ourselves to this for the moment. Right now, if we now do this, you see a bunch of these various other graphs coming into play. This is not to confuse you, okay, but understand in a very simplistic fashion what this means. We talked about MACD, the M of MARBs. Whenever there is a blue line, right, if you put this and put a blue line which is going up above the red line and has crossed the histogram here, this greens and this kind of chart here, that means it's going to go up. So if you see, this is exactly what has happened, right? When it is crossing down below this is the point where it will go down. That's exactly what has happened here, right? Then it's still going down and it's showing a pattern here. Now this pattern of MACD is showing that it is going to come down, not what we found in price action, it's going to go up. Clear? Because price action is now showing it's going to go up, because if you see, I remember higher highs, this one is higher than this high, so that's a higher high. Lower high, this lower is higher than this lower, right? So in this criteria, price action is showing it's going up, but once you see the indicators are showing it's going to go down. And I told you my inkling about after price action, that I told you it looks like it's going to go down in the beginning, right? Because this is more familiarity, because I understand these things better because of experience. You will also, okay? So in fact, this candle here shows that it's going to go down, okay? So with period of time, you will learn the same. But now understand, to make it very easy, indicators help you do that. So what has happened? It has turned around from here and it's reversed. Now, from a price action point, we know it will come up till here at this point, okay? So now in your mind, though it is showing positive, you will not buy it. You will leave it. You said, no, this I know is going to come down. I'm not going to buy it because the indicator is showing the way it is. Though if the indicator reverses from here, the story changes, okay? So from a current discussion perspective, MACD does this for you. Number two, what does RSI do? RSI is Relevant Strength Index. That's what it stands for. Whereas MACD stands for its conversion and divergence, right? So the M stands for moving, A is for average, the moving average conversion divergence. So it's seeing where the chart is moving and whether it's converging. So if you see it is coming down and here it is showing going up. So it's a divergence. That's why it's showing you it's going down. So it looks like it will go down. RSI shows you the strength. What is the strength of the respective graph? Now, if it is above 50, right, that's the norm. If it's above 50, you see this line, it's showing 49.83. If it goes above 50, that's a good strength, right? Below 50, typically the strength withers. So this what a shaded area, right, is between 70 and 30% of where it can go up or down. So it's coming down, that means it is getting weaker. That means its probability of coming down is higher. So RSI is also showing the weakness, below 50 and going down. So there's a higher probability of coming down. So this is the second indicator which can help you understand that. But if you see ADX, right, ADX is actually a directional transformation that happens, right, where it is showing you if it is green on the top and is converged, right, means if it's moved from here to here, it typically shows there's a positive motion at even from a long-term perspective above, and the red one above means shows it's going down. Okay, even if it's above, it shows it's down. So this crossover green showing there's still a chance that it can go up, right, and it's curving from here. That means there's more strength and the momentum. Because this is a momentum the momentum indicator, if you will. So momentum is still showing positive. Hence the confusion, right? Will it go down or come up? Now, in that sense, we look at the fourth indicator, which is the Bollinger Band, right? the blue shaded area. What it shows is that it can go up. The upper limit is where it can go up to, and the lower limit is where it can go down. So if you see our price action that we've indicated, it's the Bollinger Band is showing right where it is, right? So we were good at making those points where it can go up to, right? So this is the Bollinger Band. Bollinger Band typically is showing the standard deviation. Okay, that means where to the top and where to the bottom, then at that point of time the stock can go. So what is shown is here or here, right? If it goes up, it can go up till here, which we are almost exactly at that point, right? So our analysis in the price action was almost perfect. So with that said, the ADX, if it goes up, it can go up here and down here, repeating myself. But MACD and RSI are showing down. Okay, so you wait and watch. But typically these two give you a good indication of not doing this, right? You wait and watch. With this side, there are these small dots, if you can see on your screen, right? These dots are nothing but the SAR. If you see the MARBs, that is MACD, ADX, RSI, Bollinger Band, and S is the SAR. It is the parabolic SAR as we call it. This indicates the motion direction of the graph. Now this is going down, all right, from here, because if you see the graph, you follow it here, right? Typically what happens, and let me take you here for example, right? We saw this guy going down. You see the parabolic SAR is going down here, right? Until this point where this guy's jumped up. So parabolic SAR was here, and when it went here, this SAR started now from here. The dots are here. Okay. If I just hide the indicators, rather the trend lines, see the parabolic SAR comes here. So now it is going up and up and up. So the parabolic SAR makes you understand the direction also. Besides the MACD and the ADX and all that, you're just verifying your direction. So now this direction, if confirmed by parabolic SAR, and the next candle that you see the next day, if the SAR goes down below the candle, that means the motion is upwards. But if the next candle is below this one, which is currently the candle, and is probably red or even green, but parabolic SAR is up, that means the motion downwards is continuing. Clear? That is what a parabolic SAR does. So I've talked about 4 indicators, right, which typically give you an outcome. I talked about price action in its most simplistic fashion. So the strategy of MARBs and the 4-step formula, right, out of which we finished the screening, which gave us UNUM. and then we did a price action on this, the second step towards the strategy. And based on this, we did an analysis using certain indicators. And now our stand is, it looks like that we have to wait and watch. We cannot do anything more. So we cannot position size this. All right. For that, I'm going to quickly show you something from here. Say Google. Everybody knows Google, right? So let's see Google. And it's going to take some time to come up. So here it is. All right. Now Google is going to go down as well. All right. By criteria here, even if you look at ADX, it's gone down completely. Right. And you see parabolics are down. You see MACD already crossed the histogram down, and RSI very weak. So Google is not a good example. All right. Now this is because at the time I'm recording this, it was a disaster happening on the US stock markets. All right. So let me quickly jump into India stock market, which is doing the best amongst the world. All right. So let me quickly take you to something, a different screener now. All right. And it's called Chart Inc., which is used specifically for Indian related stocks. And if you see that, I will take you through one of the good ones, and I'll give you a clear example. So now you can relate to the ones which are going bad and you don't take a trade, and the one we take a trade and see how that works. Okay. We go to a quick dashboard. I have certain criteria filled in, which I will share with you, and I will pick up something called say a bullish weekly super trend. All right, let's pick up this, all our marked related ones. Okay, if we pick this up, we get something called these three stocks right on your screen: Iris Clothing, Eros International, and RITES. Let's pick up RITES. All right, let's go back to our trading view. Okay, and we'll pick up RITES. We'll pick up RITES, and the RITES is, so here is RITES, right? Now if you see the MACD, it is curving up. It has turned its scale here, right? We found in Chartic, we found RITES as weekly it's going to go, run up. Though we are on a daily time frame, right? Each candle is a day. We're just observing here, and I'll go to the week one and you'll understand what it means. Then you see the RSI. You see the strength. It's almost reaching 70%, right? Now also understand, so when it goes beyond 70%, it's also an overbought zone. It definitely might come down from there unless it sticks there, right? So, but MACD, RSI, and ADX all showing positive motion, right? And if you see a price action, if you put a trend line like here, right, here to here, right, there is a trend line like this we can show, and you make another trend line because that probably is a weekly one, and you create one here. It's all showing going up, all right, and this one is even more steeper. So I'll not get into the criteria of top and bottom, right? Bollinger is giving you that a little bit, though there's a red candle here. So we see that the trend is upwards, and we quickly see a weekly one, how it is going, because the short-term trend is very clear that's going up. Weekly trend is also showing very clearly it's going to go up, all right? So if you make a quick line here, right, of the topmost one in a weekly basis, you see it has cracked it. That means that's why the breakout has happened from here. The previous resistance is broken, gone up. And if you create it now for the next resistance level, now this is the next resistance level, it's almost there, all right? So it might crack that, you never know, all right? And if it does, it goes to the next level further. Now if it does, right, you can typically use something called a tool called this is called the Fibonacci, right? And I'll discuss in detail in a RISE circle, but it typically lets you know up till where this can go, right? It's a phenomenal one of the indicators or other tools that you can use. So it shows can go from a level of 300 and say 26 now to 41419. Okay, that's what it indicates. So now what you have understood now is that this is a stock that can be now taken into our custody to start running with. It will give us at least 10%, right? We just saw from using Fibonacci that we can go to 426, which is definitely more than 10%. So now you go and start using the positional, the position calculator for position sizing. So we did screening, we analyzed the screened stock, and now we are position sizing it to enter and to exit. Okay, so I will take you now to the position sizing calculator. So this is your position sizing calculator. Okay, and if you see this, what this means is that typically if you put your risk, that means the capital you want to deploy, so there's a number here which can be changed, and if you see the entry price, right, we have a 326 for example already there. Okay, once you put that number, right, okay, this is to show you what the formula is, but if you put a number here, right, say it was 350, you see the below one, the stop loss and the target prices changes. All right, so for argument's sake, since we are doing 326, we have 313 as a stop loss and 359 as a profit for 10%. So this is 4% loss, that is the 10 for the 10-4 rule. We have a 4 rule which is stopping here, and we have a target price, we can go up to 359, and what shows here is the how many lots you can buy. So at the first level for 10% profit you can buy 31. For next level that we choose, it will become 30%, and then we become 20% for the third lot, until you meet your target of the pyramiding activity. So this is the pyramiding that is happening. Okay, that is what the position sizing does based on the criteria you put in for risk. A detail of this will be discussed during our RISE circle. Okay, but this is a ready-made calculator, you can download and start using it, as simple as that. Okay, so with that, what you understood is you enter here, you put a stop loss here, you target price here, and then once that target price is reached, you come out. If it goes down, take a stop loss and you run with it. Okay, I'll give you an example of that and how a pyramid is made. All right, with that, I'll see you on a chart which already has been done. Okay, I'll see you in a minute. So I've taken an example of Tata Elxsi for you to see that you make these line items, right? We make a stop loss here, that if it goes below this, we come out of it. We entered here, right? The blue line shows the entry. The next criteria is that we go up till here, that 10%. Then we go here to make the next lot, or that we assume as per price action where it's coming to, and then to the topmost level where we feel the price can go up to, right? So this is the pyramiding. So once this starts going up, you might take more, and if it goes further, you might want to take more at this stage, and then until it reaches the top. But mind you, if it goes below, right, it has already gone below, right, I should ideally come out of this, but you see there's a green one which has happened and shows that it will go up, so we wait and watch. Okay, and if it again comes down with a red candle, we'll come out of it. So with that said, and you'll understand this better if I quickly remove all the indicators, right? So here's what it is. This is what I meant. So it is crossed, it is probably gone above the stop loss line, though it has come down, right? And this is in my absence. So there's some trade which has been taken, it seems, and it is down. I should ideally come out of here because of the 10-4 rule, but if not, still going up, because I probably waited assuming it's still going up and showing very categorically is going to go up based on the indicators and other factors. So you do that, all right, and then these are the pyramids that are happening on the top. So you buy more, and until you reach your goal, and if it still looks the momentum is strong, then you buy more here and go up further. And if it goes and crosses that level, I think you should then put it to your the larger portfolio, which can go on for some more years of sorts. Okay. Now with that, let's jump back to the challenge so that you get a view. Now you got a view on this, that how this is done. Let's go there. So in the challenge now, you have to open an account, get your trading view, do the things which I told you. Again, do some paper trading, do some real trading with very small amount so that you don't mess it up after you successful in your paper trades, and then practically go about doing it on a regular basis until we meet. We go into deeper, and there are about thousands and hundreds and thousands of indicators out there. I've created certain templates which will be shared over a period of time, which give you almost very near accurate results, right? And we'll go into deeper concepts of how this can further help and enhance your trading capabilities for short term, all right? And of course, and how it helps in the long term. So with that, I will see you in the next one for long term trading. All right, I'll see you there in a bit.